So over this past Friday, you might have seen a couple of price-sensitive announcements pop up in some of your favourite companies that you've been watching. It might have read something along the lines of S&P, Dow Jones Indices announced the quarterly rebalance. Maybe you've been trying to make sense of what this announcement means, or maybe you were wondering which companies were included and potentially removed from some of those headline index rebalances. Today we're going to dive into both of these questions. We'll talk about the companies that were included and removed, and of course we're going to unpack what all of this actually means. For those who are watching, yes, we're back at home in front of the set. For the next couple of weeks, we've got a project to complete back home. Obviously, we've been traveling Europe. We'll be back over there soon, but a bit of nostalgia for those long-term viewers of the channel. If you're new here and you haven't yet, make sure you've subscribed and turn your bell notifications on. We've got plenty of videos keeping you up to date with everything happening on the markets. So what are the quarterly rebalances? Well, to understand that, we've got to understand what market indexes are. So indexes at their core are a portfolio or a basket of investment holdings. Often they represent segments of the financial markets, so maybe they'll be based on capitalization. So maybe top 500 companies like the S&P 500 tries to represent, or the top 200 companies like the ASX 200. I'm sure you've heard many of these based on capitalization or size, such as the Dow Jones 30. But they can also be based on sector. So you might have something like the NASDAQ, which tries to represent the growthier end of the market with mostly tech-focused companies. Or you might have indexes which represent the oil and gas space, the electric vehicle transition. They are baskets of companies that can be grouped into any manner of different holdings. Also, you can have geographical and regional groupings, but generally capitalization and sector are the headline ones that we see. As a result of this, however, they have to be rebalanced over time, because obviously you can't just have one basket of companies that continues to represent a group for years. Things change, companies grow, there's acquisitions, there's mergers, they shrink in size, there's excitement, different things happen. And so as a result of these rebalances, they can attract a lot of attention and potentially increase demand for some of the shares that are included into different indexes. This happens for a range of different reasons. Some are fundamental and some are more sentiment driven. But for three of these core reasons, first and foremost, with the rebalance, funds and ETFs that provide exposure to these indexes, maybe it's to the ASX 300, or maybe it's to the leading 100 companies over in the US market. They have to provide exposure and buy the shares of the companies that are included into this. However, on the other side of the coin, those shares that they purchase can also be loaned out to companies that may look to short as well, which is another dynamic to be considered. On the other side, mandates. Some funds, for example, may only be able to purchase companies from, say, the ASX 200 or the ASX 300, or only companies in the S&P 500, and they can't look at companies outside of those. So, as a result of that, it opens up exposure for companies that are included to a larger potential capital pool. And the third one is an awareness one. This is more sentiment driven, but investors search for ideas as well as validation from some of these lists. Newer investors might say, hey, I want to understand the top 200 companies on the market. This is probably a safe place to start. And they might scroll down the ASX 200. Or potentially, investors look every quarter with the rebalances to see what are some new companies that might be up and coming that I'm not familiar with, that's worth me kind of pouring my eyes over and having a little bit of preliminary due diligence into. And as we know, share prices are simply a function of supply and demand. And so if there's increased demand for shares, with all things being equal on the supply side, as a result of that, that can draw increased attention and potentially lead to some enthusiasm. In terms of what happened for this quarter itself, as we can see here, the ASX 100 had one inclusion, one removal. Tabcorp obviously had its capital markets activity. So as a result of that, it had its removal, and Shopping Centres Australasia Property Group was the inclusion on that front. In terms of the ASX 200, this is a benchmark index which attracts generally the most attention. There was a range of different inclusions there. As we can see here, some of the fascinating ones were Spark New Zealand, Sayona Mining on the lithium side as well, Levisa Holdings on the retail side, Johns Lynn, Charter Hall Social Infrastructure REIT, which was interesting, and then Capricorn Metals. And then on the removal side, as we can see here, very tech focused, which really speaks to some of the trends that we're seeing throughout the market actually. Life 360, City Cheek on the e-commerce side, EML, PointsBet, Zipco, many of these technology names, a lot of which had runs up during 2020 and 2021, have unfortunately been removed from the index, as well as AVZ Minerals, which of course has been in involuntary suspension over the past few months. On the ASX 300 inclusion side, a lot of similar themes surrounding the electric vehicle transition, many of the raw materials that will be necessary for that, as well as the broader electrification and decarbonisation trends have seen some excitement. As well, of course, we see Boss Energy and Deep Yellow on the uranium side with the nuclear discussion growing. Argosy Minerals, Arafura, feeding into some of those trends. Of course, Neometals, similar with the recycling trade. Seven West Media, too, is a fascinating one with a lot of attention on Seven West over the past 6 to 12 months. In terms of the removals, AVZ Minerals has unfortunately fallen out of both the 200 and the 300 with its suspension in trading. Firefinch obviously spun out Leo Lithium, which was a lithium-focused aspect of its offering, and now it's pure play focused on gold with Marilla. Nuix, Redbubble, a couple of these technology names, which obviously similarly had runs up in 2020 and 2021, they've fallen out of the indexes. In terms of the All Tech Index, there's a range of different requirements for these. There's actually no cap in terms of number of companies that can be included into the index. However, there are a range of requirements that if you're no longer meeting these, you are running the risk of falling out of those. And we can see a couple of companies like Airtasker, Atomos, IOUPay, Marley Spoon, Sezzle, Tesserent feeding into that tech theme as well that were winners over the past couple of years but have had a little bit of a reduction in terms of attention and focus. I'd love to know your thoughts on it all. Drop in a comment below which companies attracted your attention with the inclusions and the rebalances and which ones were you surprised at as well. In terms of what to watch, so obviously funds will look to rebalance portfolios to track the indices. We talked about that earlier. There's the potential for increased attention from funds and investors on the new names. Obviously, it's worth understanding that this is part of a process. It's a major milestone for the companies. Congratulations to all of those that were included. It is a significant tick in the box and major validation. But investors shouldn't be expecting fireworks and parabolic moves. It's just another step on a long journey of the development of companies and projects, though it can't be understated how significant of a milestone it is. As discussed, it can be a boost to sentiment, but of course, the underlying fundamentals don't change with these companies despite inclusion or removal. The companies will continue on day in and day out, trying to develop the projects and the company progression that they're focused on. A big thank you for joining us. Here's another video on the markets for you to check out after this one. Hope you enjoyed it. For now, stay well and happy investing.